To retire off of dividends is very easy, but a lot of people make this process very complex. So to reduce that complexity, today I'm going to introduce a fund that has a record not only of increasing their dividends, but also a price appreciation, because this is very important for you to stay on top of things. So today I'm going to introduce Schwab US Dividend Equity ETF, which is SCHD. This is one of the very popular ETF of all time. The price today is 77.41. And I'm going to show you how you can invest only 50,000 in this fund, and within shorter period of time you'll be able to actually just retire off dividends, from this fund. So we can see the price. Look at this. Look at this chart, guys. It's pretty good. I love how this goes. It's just keep going up. There's a little dip right there. I think it was March 1st, 2020. That was COVID era, and from there on it went up, and there's a little dip here and there, but overall it's uptrend, so that's pretty good. 52-week range has ranged between $66 to $80. So right now has crashed a little bit of from the highest it was at 80. So maybe it's a good time to pick some shares here. If we go to another website here, it's still on Yahoo Finance. We can see Schwab US Dividend Equity, SCHD, price is 77. But look at performance, guys. Here we look at performance here today. It has returned almost 4%, but that's not all. If we go down to 1 year, this fund has returned 17%. So it's lagged the category of the similar ETFs. But let's stretch all the way to 5 years. We can see this has returned about 13%. So it has outperformed the peers, right, at more than 4%. And if we look at the 10-year period, has returned 10.99. This is a pretty good 10-year period, right? And if we look at the annual total return between 2016, it returned 16%, but the peers, the same category of the same fund, has returned only for 14.81. We look at 2017. This returned about 20%. This returned about only 15. So all in all, it has outperformed its peers. So it's very important ETF to invest your money, because it shows you that it has outperformed most of other ETF, and by the way, including even the S&P 500. So this is just a price appreciation. How about the dividends? Because you're investing for dividends and income. So let's go to Seeking Alpha website. Look here, guys. This is a dividend appreciation or growth rate. We can see here compounding annual growth rate of dividends. So we look at the 3 years has returned, or the rate of dividend increase about 12%, right? If we look at the 10-year period, right, we can see here is 11% actually. This is a median. All other ETF has returned about only 6% within 10 years, but this one has returned about 11% within 10 years. Within 5 years has returned 12.88, and the median on other funds or the similar or peers has returned only 5%. So it's a pretty good ETF when it comes to investment and your dividend reliability. You can see here 5 years has returned about 12.88. 5-year growth rate, and this is not growth rate of the stock, this is a dividend, right? Dividend growth rate is 12 years, so has a record of 12-year return. Pretty good. Now you might be wondering what this fund does actually. So let's go to Schwab website, and we can see pretty much the summary of this fund. So Schwab US Dividend Equity ETF. So the ticker symbol here is SCHD, and in total expense ratio is 0.06. You're paying very little when it comes to MER, or management expense ratio. Now, objective of this fund, the fund goal is to track as closely as possible before fees and expenses the total return of Dow Jones US Dividend 100 Index. So we know Dow Jones Industrial has only 30 stocks. That's a main one of the popular ETFs, but this tracks 100 stocks that trade on the Dow Jones Industrial. So why the Dow Jones? Because Dow, of course, has one of the best stock that has a record of paying dividends and also stability. They're steady Eddie. They're not big tech, but they are very good companies, right? So highlight of this fund, okay, straightforward, low cost fund offering a potential tax efficiency. Okay, the fund can serve as a part of the core or complements in diversified portfolio. So you can make it as a core, meaning you can just have this as your main investing vehicle, which in this example, that's exactly what you're going to do. You're going to put $50,000 and then call it a day, right? And or you can make it as a complement. I mean, you can invest in other growth ETFs, for example, the QQQ or the VOO or VOO, they call it VOO, or SPY, S&P 500, and then you can have this as a other complement, right? If you want to do that. But in this example, we're not going to do as a complement. We're going to do this as a core for your retirement portfolio. Okay, the other point here, it tracks index focus on the quality and sustainability of dividends. As I've mentioned, of course, Dow has most of the best stocks when it comes to dividends, and invest in a stock selected fundamental strength relative to their peers based on the financial ratios, right? Because you, as other example, I've shown you that it has beaten the peers, which are the same similar funds. We look at the inception date. It was incepted, or it came to the market on October 20th, 2021. Net asset has a 54 billion, so it's a big fund, right? When it comes to management ratio, I've already showed you it's 0.06, very cheap. Name of the fund is Dow Jones US Dividend 100 Index. That's of course the index that it tracks, right? We look at the NAV, net asset value right now is 7774. Total holding has 103 stocks. And of course, it's large value. SEC yield is at 391, and the yield that we have from this fund is 339. So we have 340, and with that little dip today is going to be a 369. We look at the price. Look at this other metric here: price to earning. Okay, P ratio is 1621. So it's pretty value, because remember S&P 500 at this time is almost P ratio right now of S&P 500 is over 21, I think. So this is only 16, so it's a value ETF. And if we go down to performance, I've showed you performance on the Yahoo Finance, but we can look at the 10-year performance has returned on the market, has returned about 1099. Dow Jones US Dividend Index has returned about 11.09. Since inception has returned about 1292, and this is 2092. The other one I showed you is 1099, is because of course they include the dividends that they've paid. So far has beaten the S&P 500, because S&P 500 has only returned about, I think, 11%, right? So this you're getting almost 13% return on an annual basis. That's pretty impressive, guys. Like I know this is the only fund you really need. I didn't talk too much about taxes in my example that I'm going to show you on a spreadsheet, because the thing is, taxes is a very complex issue, and people pay taxes differently, because some people they'll pay tax in their portfolio. Some people won't pay taxes because they are invest in tax advantage accounts. So that's why I didn't calculate taxes on my example that I'm going to show you. Dark blue line here, this is SCHD, and this is the peers way below there. We look at the portfolio composition. So the best top holdings, it has Home Depot, it has AbbVie, you have Cisco Systems, it has Amgen, Chevron, Lockheed Martin's, and BlackRock, Verizon Communication, Coca-Cola, United Parcel Services, which is UPS. So it's very steady companies. These stocks, not only they're steady Eddie, but they have increased their dividends. Verizon just recently has increased their dividends, and of course the stock was lower, but now has gone up. 70% of this is financial. Healthcare is 15, consumer staple is 1389, industrial 1351, energy is 1284, consumer discretionary is 1008, information technology. So they have very little in tech. See, only 8%, and it's because of course tech don't pay dividend. It's for growth. So if you want a growth, you can invest in tech companies like other ETFs like a QQQ, or VGT from Vanguard. Material, they have only 312. Utility is very low, so they focus more on financial, because financials pay really good dividends. Healthcare and consumer staples, those are Home Depots, and and healthcare, of course, AbbVie, etc., Pfizer. So it has a really good composition. If you look at the asset allocation stocks, it's a 98% is stock. There's no bonds in it. They have some cash, and there's no leverage on this one. Pretty good. They pay quarterly distribution, so it's not monthly like other ETFs. I've made a video on like YMAX and Defiance. These pay quarterly, right? We can see here, for example, in 2024, the first they did pay in. We can see here record date or payable date. They pay in March, and the second dividend they pay in July 1st, which is today, right? So it does pay quarterly, and then of course March, July they're gonna pay in September, and they're going to pay not next one will be December, so 4 times. We can see in 2023 they did pay 4 times, right? The first one was in they paid in March, they paid in end of June, they paid in September, and they paid in December 4 times. And there's a little increase there. You can see it was 5.51 cents, and there was 70. So there were a difference in payments, right? But this, remember I showed you about the dividend growth rate here. Dividend growth rate was 12 within 5 years, 12.88, or if we come to overall within 10 years has a growth rate is 11.1. That's on aggregate, because the dividend they have paid is differently. They're not just every month they pay, for example, 5, and next month they pay 6, they pay 7, they pay 8. No, it's just different. But overall on aggregate, that's a growth rate of 11% within 10-year period. That's a good record, guys. Now let's see how you can invest in this ETF using these dividends, and using only $50,000 to retire. So we have our calculation here. What we did, I put $50,000 here. Monthly contribution, you don't put any other money, right? You just put $50,000, you call it a day. We have our dividend growth rate was 11%, and we have our annual growth rate of the dividend that they pay, right? Or annual dividend yield is a 364, and the growth of that dividend will be 11.1, and that's a record from 10-year period. And share price has returned about 10.99. Of course, if you put the dividend together with this one, it will be over 13%. But now, because we have a dividend growth and we have a price appreciation here, we're gonna see how this fully will perform after 30 years. By the way, this is 30 years, and you might say this is a long period, but guess what? You can play with this number. If 30 years too long for you, then what you're gonna do is just increase amount here, okay? But let's look at the calculation. So the first year you invest, right, $50,000. The following year, within 3 years, you're gonna have a $65,000, and your dividend you receive, annual dividend you receive is $2,000. Let's skip all the way to year 7. Now your dividend you're receiving annual is gonna be $3,000, right? And your portfolio at that point will be 114. If we go to year 10, now you're getting $5,000 in annual dividends, and your portfolio will be 172. Let's skip all the way to year 15. Your portfolio right now will be over 300,000, okay, almost 350, and your annual distribution or your annual income you'll be getting will be 11,000, and the yield, of course, is the same, because this yield, why it stays the same there, it has increased, but they also count with inflation, including this one, right? So now altogether you have received, within 15 years, you have received $76,000 with the growth of appreciation of your stock and everything like that. Now you have 343. Now if we go to year 20, now your annual distribution now is 22,000, right? And then your portfolio right now is 684,000. Now let's skip all the way to 1 million portfolio. At year 23, you getting $33,000, and your portfolio at that point will be $1 million. You're a millionaire within just 23 years, and that's just investing 50,000. So if you wanna increase that, so let's say for example this is 23 years, you wanna cut it in half. Instead of you having $50,000 here, you can increase. You cut your year and a half. You wanna cut that in 15 years, so you just put 100,000 there. And if you wanna even extend more, the more you put here to begin with, of course, the less years is going to be. And we can do that calculation, but right now we're just going to stick with $50,000. Now, let's go all the way to year 30, right? If you're a young person and you invest in $50,000 today, and then you have a lot of time to retire. Guess what? 30 years, you're going to have over 2 million, very close to 3 million, because you have 207.11. That's almost 3 million. And at that time, you're going to receive $89,000 in dividends. By the way, you might say, oh, 89 in 20, 30 years is going to be less. No, because this amount has already priced in inflation. So you don't have to worry about inflation. Inflation has been calculated into this math. So that's how you can generate, you can retire with SCHD just investing only $50,000, guys. So, it's a pretty cool, Again, if you want to you want to cut that year in half. So, for example, you don't have 30 years. You only have, like, let's say, 10 years. All you have to do is to put a huge amount of money. Or if you don't want to put a huge money, you see here monthly contribution. If you put $500 here and you put like 50,000, those years will be reduced. Or, for example, if you want to put $5,000 and you put $100,000, then you're gonna be even reduced more. So the more money you put, of course, the more your time will be shortened. But for most people who don't have the money, within 20 years, you can invest $50,000 and you'll be perfectly able to retire. If you find this video helpful, don't forget to share with other people who will find this helpful to their lives. And if you like this content, just make sure you give me a like. And then don't forget to subscribe, because I always keep you updated and give you this guidance on how to retire with this type of ETFs. So again, I'll make a next video very soon, so stay tuned. That's all for today, guys. Bye bye.